What's up, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with SPY, Tsla, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what's happening with the economic calendar moving forward, talk about other factors following the market, so what you should be watching for as time progresses. But let me just mention that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire community as a whole. Anyways, with the way the market's moving thus far, I just want to say that there are some signals showing contraction, and the market may dip a little bit when it comes to the way we're moving. We may feel some of these imbalances below as we approach some big data, but whether or not this move continues will be determined by some very important data. So the question is, will we dip a bit and then get a huge bounce, or will we just continue to dump? That will depend on the FOMC minutes. So I'm going to talk about this first before I break down the charts. What are the FOMC minutes? It's going to be a report. It's not actually an FOMC meeting. It's just a report that comes out, and the minutes will give us more insights on what on earth these different Fed officials are thinking, because Jerome Powell is not the only person from the Fed. There's other Fed officials that have very important opinions, very important insights when it comes to votes from what the Fed is going to do, and it's going to give us more insights on what the board is looking at. So I think that whether they favor a cut or not will be very important for the markets, and it's going to end up causing the market to price in things possibly very differently, maybe not. So right now, the market thinks there's a 67.5% chance we get a 25 basis point cut and a 32.5% chance we get a 50 basis point cut. If the majority of the Fed officials say we're going to be doing a 25 basis point cut, this could actually start going up, and then this could start going down, and that could cause a big move in the markets. And then the same thing could happen vice versa. If the Fed is going to be even more dovish, the market could see a bigger bounce. If not, the complete opposite could happen. So we'll just have to wait and see. I also want to mention that these pieces of data are just another form of manipulation. So what these institutions and then players do is they look at this data and they use it as an excuse to kind of screw over people and to make very big moves. So when the data comes out, whether it's dovish or hawkish, I don't even think that's the biggest factor. I think it has more to do with what they're trying to pull off. They could use it as an excuse to pump things like crazy to squeeze shorts again, or they could do the complete opposite. They could completely dump the markets and try to make money for the opposite direction, especially as there's been a lot of call buying. So it all depends on different factors and what they're trying to pull off. So the best thing that I'm going to do is just kind of tell you, I don't know exactly what's going to happen when the minutes release. I do think the market looks a little bit more bearish as we approach tomorrow, and we might see a little dip tomorrow. And then we might see a lot of consolidation, and whether or not we get a big bounce or a dump depends on what kind of reaction we get. So we'll just have to wait and see. I can't predict what the Fed is going to say, so we just have to wait on that. When it comes to other pieces of data, the market is quite neutral right now. We used to be very fearful. We're getting close to neutral. This is shifting a little bit. We'll see if we maintain this structure. If we start to see a lot more fear building, this could cause the market to dip even more. And the complete opposite could happen depending on how things go. But for now, the market's neutral approaching the FOMC minutes, and we're going to be looking for a very big reaction. Will we get closer to greed and see a big market bounce, or will the market get a big rug pull and become more fearful? We'll just have to wait and see. Momentum is still at greed. Currently, it is holding well above its 125 daily moving average. Not bad whatsoever from the S&P 500. And then I also want to note that the puts and call option positioning is still at greed, because we're still seeing a lot of puts being closed. If you look at the 5-day average, the put to call ratio is dipping because puts are being closed and calls are being bought. The hedging has been continuing. Even as the market is dipping, we're still seeing some buyers trying to defend. People are still trying to get calls, but we'll see if this works out or not, because there's a lot of trickery and manipulation in the markets. And as people are going long, it's possible that the market makers have a mind of their own. They have their own game to play, and they may try to hurt those same people. On top of this, the VIX is trying to rebound. It's trying to get back above its 50 daily moving average. We'll wait and see on that. I'll talk about that in just a few minutes. So for earnings, just know we just had like Toll Brothers and a few more that have come out. Lowe's didn't do too well in the morning. They had to cut their guidance. I talked about that already. And then for tomorrow, we have more retail like Target, Macy's, TJ Maxx announcing their earnings, not to mention Zoom and a few others. For Toll Brothers, they ended up raising their 2024 guidance after a fiscal Q3 earnings topped consensuses, and that's a good piece of news for them. So they beat on the different expectations. They beat the different pieces of data we were looking at, and they did relatively well when it comes to EPS and revenue. They beat analyst expectations on EPS. Revenue was pretty close to expectations, and then finally their guidance is not bad, so that's part of why the share price is up. Anyways, let's talk about the market. What do I see happening right here? So on the 4-hour time frame, it's quite clear that we are losing volume right over here, and we're contracting just like that. So we are starting to contract a little bit. When you look at the 1-hour time frame, notice that we are slightly dipping here, and we're just barely holding our 50 EMA. And this happens to be at a very, very key level. Sorry, we're holding our 20 EMA at a key level at the 55.8.5 area. So we'll see how well this holds up. So in my opinion, I think that this is a levels market. We're just in a range. We have this resistance at this 560 area, and then we also have support at 558. But looking at the 4 hour, I think that there is a risk of us testing the breakout area. So generally, that is what tends to happen during these like little dips. So when you look at SPY on the 4 hour and also the QQQ, you will notice that the breakout from this resistance happened to be like right around here, this 556 area, and then also aligns with this imbalance. So I'm seeing a confluence of support there, and there's a good chance that that might act as a magnet. So we might dip a little bit closer to 556. I think that's a little bit more probable for the chart right now. It does look like it's going to dip a little bit more, but then we'll see if we get a big bounce or not. So just to be frank, if we hold above 560, we're going to be turning back up. If we lose 558, we're going to be dipping back down to 556 most likely. And that is looking a little bit more probable to me. We could get closer to 556s if we continue this trend, and that's looking quite probable. But there's a big but. This might happen approaching the data coming out for tomorrow, the FOMC minutes. Might be a little dip and then some consolidation. I think there's going to be a lot of chop and a little bit of a dip coming. And then we'll see if the FOMC minutes cause an opposite reaction. Will we dip just a little bit, then get a big bounce and start pushing back up to the highs? Or will we get a big rug pull and start dipping down to at least 552 or below that? We'll just have to wait and see, guys. But I just want to make it very clear that there might be a little dip coming, and then we'll see if we get a big bounce or not, depending on the FOMC minutes. That's going to be very, very critical. Part of why I talk about a little dip that could be coming is because the daily also looks a little bit weaker right here, might come down a little bit. So we'll just have to wait and see. Be very, very mindful of the fact that there is manipulation in this market, and we are due to see a little bit of a dip. The breakout hasn't been tested yet at this 556 area, so it might test this first before anything else. So in my opinion, just to be frank, the market is in a range. Okay, we have the range between 560 and 558. We might dip a little bit below 558 and get closer to 556, and then see a lot of consolidation. That's the most likely possibility I'm looking at. And then whether or not we continue that dip depends on the FOMC minutes. That's what my analysis is suggesting. Now, on Nvda, the same thing is going on. Notice how it's been dipping quite a bit. It came down not just this imbalance, but actually below this. So when it comes to levels, basically this key resistance was up here around this 130 area. We rejected off that. We came down to our support very close to this 126.5 area. And notice how we're currently just barely at support. So this looks a little bit weaker to me. I think that this might come back down to come and test support. So I do see a risk of us coming down closer to about the 124s again, right over here. We might be retesting this support. And if that breaks, we'll be coming all the way down to about 123.39. So we have some tight levels on Nvda. I think there's a risk of it dipping a little bit lower looking at this chart. To be bullish, you want to get back above 128 and eventually 130. And to be bearish, you want to see us basically lose 126.5 and 124.7. And then we could be dipping down to 123, then eventually 121.5. So yes, Nvidia might be dipping a little bit lower into like the mid 120s, or maybe get a little bit lower than that. That looks a little bit more favorable. It looks like it might dip a little bit from a technical standpoint tomorrow, and then we'll see what the reaction is depending on the FOMC minutes. For Bitcoin, we are starting to dip a little bit. So we had this resistance at our 200 EMA struggling to break through that. And now we're barely at support currently at 59,300. So if we lose that, we could be dipping to about 58,800. And if we hold above this, we could try to get back above 60,000. The technicals are showing contraction on the 4 hour. So we are favoring 58,800 for a little bit of a dip on Bitcoin, which could once again dictate different parts of the markets. On ES, for those who are interested in futures, I do see a little concern. We got a nice break above this resistance. This is where the breakout happened at 5,600. And notice that we are kind of flat right now, but we'll have to see if we do end up dipping a little bit. Typically, we do like to test the breakout area at that 5,600 area before we try to bounce. So I do see a risk of that happening. If we reclaim at 56.25, we could try to bounce a little bit tomorrow towards 56.40. But I favor that if we do get a balance, we might actually tip a bit more. I want to see us test 5,600 first, and then we'll see if we get a bigger bounce or a big drop. That depends on how we end up reacting to FOMC minutes. So I think we might pop a little bit tomorrow, then start dipping, and we could still test 5,600 flats before we see a big reaction. Now, notice for Tesla, Tesla is doing something very similar. I have it right here. Tesla is also starting to contract a little bit. We're barely at the 220 support. If we lose the 220 area, I think we could get very close to about this 217 range. And if that fails us, 215 is coming. We have resistance currently at 222. If we break that, we're going all the way back up to about these imbalances at 223.25 and then 225. The chart is kind of turning on the 4-hour, and there's a risk of us dipping lower towards the 217 area. So I see a risk of us kind of dipping a little bit on Tesla. And I think that there's a good chance of that potentially happening. However, there's a big however. That does not mean that Tesla is overall bearish. The overall trend is actually still bullish on Tesla. We're still holding this trend line in the upwards direction. So we're still uptrending on Tesla, making higher highs and higher lows. We're still technically in that uptrend. We could dip more and then still bounce off the trend line and remain bullish. So don't turn too bearish on Tesla. We're not necessarily like tanking. We're not necessarily crashing. We're just seeing a little dip so far. So I think the most likely possibility for tomorrow is we dip down to 217 to 215. If we break past 223, we could turn back up, but that's looking less likely. And then if we do get that dip, which I think is very probable in the mid 210s, I think that whether we get a bounce off that or not depends on the FOMC minutes. So we'll see what that leads to. Notice that the QQQ is also churning on the 4-hour. The problem is we're barely holding the support around this 479 area. And if that breaks, just look at this breakout, right? The breakout on the QQQ is right over here at this 475 area. So generally what happens is you do like to test that, especially if you have this big imbalance over here. So generally that is what tends to happen. So you want to be very mindful of that. Look at 480 as our resistance and then 481.25. If we break that, we could turn back up to the high from today. If we end up losing the support right here at 479, I'll be looking for a dip all the way down towards 478. And then if that fails us, we're coming all the way back down to 475. So it's 478 to 479 areas where we have support. If we lose that, we're going to be looking for a big drop. I think there is a risk of us dipping a little bit lower to retest the lows at the very least. I do see the 478s coming tomorrow, most likely. But whether or not we continue and get a big dip may depend on the FOMC minutes. So we'll see how that goes. With that being said, we also have Aapl right over here. Now, one thing worth noting about Aapl is we are holding up decently, but there's a tight range right over here. We have 227 as resistance, and we have support at about this 226 area. We're kind of stuck in the middle. If we break 227, look for a push closer to 230. If we lose 226, we could be dipping back down to 224. This is slowing down, so I think we're going to be testing 226. If that fails us, we'll dip a little bit lower. But then whether or not we get a big bounce off that support at 225 or not depends on the minutes. So look for a little bit of a dip on Aapl, and then we'll see if we get a bounce or not. There's a slight bearish divergence on it. So that's what I'm basically eyeing, at least for the time being. For Palantir, we're also churning down a little bit. We failed to hold above 32.5. So I think we might get very close to about 31.5 tomorrow is the most likely possibility. If we bounce off that, we could turn back up to the highs. If we lose that, we're going to be dipping all the way down towards 30.5. So watch these levels very, very carefully. There is some weakness developing on the charts, and there's a risk of us contracting. So we'll just have to see how things go. But in my personal opinion, I think that there is a risk of downside. So you have to be very, very careful with the way Palantir is moving. Now, I also want to note that even if we do get a little bit of a dip to the downside direction, there's no guarantee it's going to last forever. There's no guarantee we're going all the way down to like 29, 28. This will depend on what happens with the minutes. So I see a temporary dip coming, then we'll see what the reaction happens to be. Supermicro is trying to rebound, but now it's starting to dip a little bit. We're barely holding support at 605. Except if 605 fails us, I think that there's a risk of us coming down to this low from 2 days ago, all the way down to about 596. And then if that fails us, we'll be dipping all the way down to this imbalance towards 580. So watch for these supports. There's a risk of this dipping lower. We failed to break resistance around this 635 area. So now we're favoring the downwards direction a little bit more. Now, that's what's looking more favorable to me. Unless we hold 605, the chart is favoring downside. We might be testing 605 if not breaking it. Now, whether or not that breaks will cause a big move. And if we do dip a little bit closer to about 600 flat, if not like the high 580s, whether or not that happens, it may lead to downside, but the move will also depend on the minutes that come out. So the FOMC minutes will be another big factor. Rivian looks more bearish. I was saying this for quite some time. We have this very, very nice looking bearish wedge, right? We're making lower highs consistently. And I think that we're barely holding support at 13.15. If we lose that, we're going back down to 12.5. I think this is going to be dipping lower, so it looks a little bit more bearish to me. It is still favoring the downside. So if I pumped all the way up to about 7.5 and came back down to reject. So this could be forming a nice cup and handle. So it's still technically bullish, overall in terms of the trend, but for the short term, we are looking a little bit more bearish. So the medium term is like bullish because we're making an upwards direction, but the short term looks a little bit more bearish. Let me just clarify that for you guys. So I'm going to be looking at supports right about here. We'll see if we hold 7.25. If we lose that, we're going back down to 7 or very close to it. If we hold this, we could rebound. I see a risk of this retesting 7.25 or lower, so watch that very, very carefully. Then we'll see what happens with the minutes. For the Russell 2000, just know that the IWM is showing a little bit of weakness. We're looking at 212 as support. If we lose this, we'll be dipping all the way down towards this 210 area. If we break past 213, we could try to rebound to about 215. Now, with this big red bar, I do think that this favors the downside move towards this 212 area. I think there's a good chance we might be coming down to where the support happens to be. So in my personal opinion, with the 4-hour looking a little bit more bearish, the 4 hour is about to get a bearish cross in the PPO. We're suggesting the downside is more favorable, and we might be coming very close to the trend line. So I think that we could be testing 212 flats, if not lower levels, and then we'll see how things go. For AMD, we pushed very, very nicely up to about this 162.5 area only to reject. So we did push higher only to see a move back down. The market did push to resistance and then get a rejection. So this looks a little bit more bearish. I want to see it break back above 157 to turn back up. If it fails to do so, we're at risk basically to come back down towards 154. And if 154 fails us, we're coming back down to 152. I think this is going to be dipping lower towards at least 154. And then if that fails us, 152 is coming. So look for a little bit of a dip, and then we will see if we get a big bounce or not, depending on the FOMC minutes. So we'll just have to wait and see what happens at 2 p.m. Eastern Standard Time. On top of this, we have ARM. This looks a little bit weak to me. We're continuing to dip right now. We're just barely holding our key EMAs. So I see a risk of this potentially dipping towards 127. If that fails us, we're going down to 125. And if that holds, we could rebound. We're showing weakness where this trend line is. We're failing to hold this. So I do see a risk of us dipping towards 125. So just be careful, guys. We'll see how we end up reacting. As far as coin goes, we have this resistance around this 197 area, and then we have this support around 192. We have this big red bar, and generally these red bars lead to more downside. So I think that this could continue to dip. We might rebound first and continue lower, and I think we might retest 192 tomorrow. So we might dip a little bit, but then we'll see if we get a big bounce or not, depending on the FOMC minutes. Amazon's holding up very nicely so far. It's just kind of consolidating. So it might continue to consolidate tomorrow and get very close to this trend line. We might intersect this trend line tomorrow. Look for a little dip. It might dip just a bit towards 176.5 and then just consolidate. And we'll see if we get a bounce off the trend line or not. If we lose this trend line, we could be dipping closer to about 175, by the way, than 173. But I think that it's going to consolidate for the most part. Then we'll see what the big reaction happens to be, depending on the FOMC minutes. Meta is a little concerning to me because we have a possible head and shoulders like structure that's developing on the charts. You guys can see it right over here. We have a left shoulder, we have a head, and maybe a right shoulder forming. If we lose this imbalance, this 524 area, I think we're going to be dipping all the way down towards 520 at least. That's where the breakout was, 520. And if that breaks, we're coming down to at least 516. So there is a risk of downside on Meta looking at this setup. To turn back to bullish, you want to break past 530, and that could depend on the FOMC minutes. But just know that from a technical standpoint, we look bearish, and we are suggesting that downside is more favorable. For Microsoft, we did a good job at holding up, but there is a bearish divergence, and we're going to be testing some tough resistance tomorrow. So it could push and outperform the market and hit 425 at our 200 EMA. If we break this, we're going to be going up towards, I'd say I wouldn't be surprised if we go all the way up towards 427.5 and eventually 430. So it has upside potential if we break 425 to 200 EMA. But if this resistance causes a rejection, because we do have a bearish divergence forming, generally that is a little bit more favorable, and we'll be coming down to the least imbalance towards 422. So we'll see, guys, if we get a rejection here or not. We're just at some tough resistance on Microsoft, so I'm going to be very careful and be very patient, right? It's still uptrending, it's still outperforming the market, but resistance is going to be tough, so just give it some time. And Google looks a little bit weaker. We hit 170, so we did push higher on Google. We are green, but it did get a rejection in the process of doing so. So I like the setup yesterday. I was talking about that. We did push higher, only to reject. We're going to be basically looking at 168 as big support. If 168 fails us, we'll be dipping all the way down to this imbalance towards 166. That's where the breakout happens to be, and we have tough resistance, which is now support. If we break 170, we could be looking for 172. This chart is favoring 168 to be tested, maybe even 166 if we lose 168. So be very careful with the chart for now. For GameStop, it's kind of churning a little bit. We need to reclaim 23.1 to turn bullish. Otherwise, we're at risk of tipping towards the 21s. AMC is barely at 5. We could be testing 4.96 if not lower if that fails. For DJT, we're bearish. I said yesterday we're going to be approaching 20. We're very close to it. We're still looking very bearish to me. So DJT is continuing to dip. The VIX is trying to rebound just a bit, so it does look like it might bounce just a little bit. We'll be looking at 16.22 as a potential target. We'll see if it breaks that or not, and that could be a signal the market has a little bit more downside coming. The 10-year is kind of dipping now. This is going to make a big move depending on the FOMC minutes. And then finally, the dollar index is still looking bearish. But despite it looking bearish, we're approaching some key support in this 101 area. We'll see if we get a bounce very close to 101 flat. We're approaching 101, so we'll see what kind of move we make. We also have a slight bullish divergence that could be developing. It's not complete yet, so I can't make that call. But the dollar still looks bearish, but it's approaching some tough support, so we'll see if that helps it bounce or not. So here's my view of the markets. The market has hit some tough resistance, and we're starting to dip a little bit. There is a risk of us dipping a little bit more tomorrow, looking at these charts, especially stocks like Meta. But even if we do dip a little bit, that does not mean the market is going to collapse because there's going to be the FOMC minutes coming out, and that's going to cause a big reaction. So we'll see what the reaction happens to be. I am just a trader, guys. I am not a fortune teller. I don't know what the FOMC minutes will give us. I don't know what kind of move the market makers will kind of pull after the data comes out. Could we see a big bounce after we get our dip? Or will the market continue to collapse? It depends on the minutes, so we just have to wait and see. That's why it's going to be a big day tomorrow for big data. Thank you all so much for listening. Have a great day, night, or evening, wherever you guys are around the world. And I'll see you guys in the next one tomorrow before the market opens. Thank you for listening, and peace out.